No additions to the agenda?
We have another 3 minutes, Your Worship, just in case people get on here late. We don't need any complaints. Can we wait a minute? Just 1 minute, please?
Okay.
Let me know when you're ready.
Okay.
How are you doing, Darkies?
Oh, I'm fine.
Healing?
I'm doing, yep, I'm doing okay.
How
Thank
long are you off, or will you?
I see the doctor again on Friday, so I would assume probably another 5-6 weeks after.
Okay, they're not putting you on some kind of light duty or anything of that sort?
No, because it happened not at work. I was at home, so.
Mhm.
Just short-term disability.
Not nice to have a cast on or anything, but it's nice weather for to be off.
Yeah. Yeah, I've heard a few comments of Dr. Summer off. I wasn't planning on it, but hey, I'll take it, I guess.
Dr. Summeroff, I like it. That's good.
Sounds very Russian to me.
Anytime, Your Worship, would be good.
Okay. As stated, there's no additions to the agenda.
Yes, there is, Your Worship, under new business, item number 10, A, CEMC appointment.
Okay. So we'll go disclosure of interest, nothing. So we'll go right to presentations. BDO Dunwoody's presentation. Walter, it's all yours.
Thank you, Mr. Mayor. And it's my pleasure to be here on behalf of BDO Canada to present the audit results for the year ending December 31st, 2019. It's actually a big pleasure to be here in the month of June to present these, as typically, we've been in July, August, and even September doing the presentation to council. So I believe that in your material, you've been provided with a copy of the draft financial statements for both the township and for the Red Rock Library Board. At this stage, the audit is basically completed, and subject to our completing our subsequent events review, obtaining a management representation letter from the CAO, and tonight's approval, hopefully, by council of the financial statements, we're prepared to issue our audit report. If you have it handy, if you flip to page number 2, it would be in the consolidated financial statement for the township. You'll see there a statement of administrative responsibility. That particular report is signed out by the administration. So Albert will be signing off on that report, and it kind of outlines the role of management in the audit process, which is to make sure that the financial statements have been prepared to the best of their knowledge as accurately as possible. And it acknowledges that administration is responsible for developing and maintaining the system of internal control, which are designed so that there's reasonable assurance that the corporation's assets are safeguarded and that the accounting records are a reliable basis for the preparation of the financial statements. Our role as the auditor is addressed on page 3, page 4, and page 5 of that consolidated financial statement package. And basically our role is to form an opinion as to whether or not these financial statements present fairly the financial position, the results of operations, the changes in net financial assets, and the cash flows of the township in accordance with public sector accounting board standards, which are a specific set of rules that governments in Canada have to follow in the preparation of their financial statements. So our audit opinion, as it has been in prior years, is a qualified opinion. And the qualification comes in with relation to the liability for the closure and post-closure costs of the landfill site. About 20 years ago, the Public Sector Accounting Standards Board folks put in a accounting rule requiring that every municipality basically quantify what those closure costs and post-closure maintenance costs are going to be and record that as a liability on the financial statements. The township, 20 years ago, decided not to effectively conduct the work required to quantify that number. And basically, because of that, and because that decision has carried through year by year by year, we've qualified our opinion for the lack of disclosure of that balance. Other than that, specifically noted item, the financial statements do present fairly the financial position, the results of operations, the changes in net financial assets, and the cash flows for the year ending December 31st, 2019. Within that report, we talk about how we plan and design our audit. Our audit report basically outlines the approach that we take. We take a risk-based approach to auditing, so we focus our audit on areas that inherently are more risky in terms of determining the numbers. We review the systems of internal control. We test those systems of internal control. We look at doing what we call substantive audit procedures, which could involve sending confirmation requests to your bank to confirm bank balances, to people who owe you money, whether they be government grantors or accounts receivable accounts. We'll circularize accounts payables and make sure that external parties, for example, basically agree the numbers that are reported here. Furthermore, we look at the underlying documentation, agreements, invoices supporting transactions that have been recorded throughout the year. We do this on a test basis because nobody could afford to have an auditor go through and check every single transaction for every single nickel that goes through a set of books. And in so doing, we use statistical sampling. We use a materiality level to kind of gauge the level of errors that are acceptable. We also use that materiality number to determine our sample sizes. For the Township of Red Rock's consolidated statement, that number is basically 2% of expenses, which wound up being in the range of about $67,000 for this year's audit. So that is basically the auditor's report. So to summarize, it's a clean audit opinion, except for the fact that these statements do not accrue the landfill site closure and post-closure liabilities. So if you flip to page number 6, And page number 6 is the consolidated statement of financial position. And we call it a consolidated statement because it includes basically everything. So you've got operations, you've got capital, you've got the library is consolidated into these financial statements. So the purpose of this particular statement is to give you a snapshot at December 31st of what the financial position of the township is. And we present the comparative numbers for 2018. I think that in terms of a bird's eye view of these financial statements, the 2019 year end has been heavily impacted by the wastewater treatment plant construction project that was in progress during the year. And when you look at the balances on the statement, you'll see that while cash balances were relatively consistent, they were $1,259,000 compared to $1,163,000. There have been some pretty big swings in the other numbers in the financial statements. For example, the portfolio investments were at zero. Those investments were cashed in to assist in the funding of the project. I'm going to skip over taxes receivable for the moment. You'll see that accounts and grants receivable were $4,115,000 almost, compared to $133,000 in the prior year. The reason for the increase there is that there was approximately $4 million in Infrastructure Canada and Ontario Ministry of Agriculture, Food and Rural Affairs grants that were receivable. And again, those tied in with claims that were submitted for progress on the construction program here. Infrastructure Canada was 1.5 million. The Ontario Ministry of Agriculture was 1.9 million. And there was actually an HST rebate as well of about $600,000. So that kind of accounts for that increase in that balance. When we look at liabilities, we've got bank indebtedness was $677,000, and that is bridge financing. It looks like if you looked at note number 2 in the financial statement, you'd see some detail about a $1.7 million credit facility that the township took out, basically to bridge contractor payments with the grant submissions and to fund the construction project. Obviously, once all the grant monies are in and the project is done, I think the objective will be to have that paid out. When we look at the next line, accounts payable and accrued liabilities, $3,230,000 compared to $158,000, and again, those accounts payable represent the invoices that are out there relating to the construction project, including the contractor holdbacks, the 10% holdbacks on the progress billing. So basically, those amounts, the biggest amount is owing to Aegis, but Hatch and the Ontario Clean Water Association are also amounts that are included on that list that typically wouldn't be in a normal year, so to speak. So, having said that, those are sort of the key impacts on the financial assets of the construction program. But when you look down below at the non-financial assets, you'll see that the tangible capital assets at December 31st are recorded at $22,308,000 almost. compared to 11,848,000, and obviously that's the impact of basically $10.5 million worth of construction costs for the wastewater treatment plant. There were a few other smaller capital asset additions during the year. One kind of key thing to note with respect to that number, is that we haven't taken any depreciation or amortization for the year against the wastewater plant. That typically starts happening when the plant is up and running and basically put into use. Moving back, I just wanted to make a comment about the taxes receivable. The balance is $570,000 compared to $759,000, which basically, generally speaking, the accounts receivable when they go down is a good sign for the most part, because you hope that it's due to the collection of old and outstanding accounts. There has been some progress made by administration on, collecting accounts, including the old mill receivable. Although the real reason for the decline in this particular balance is that we ended up taking a fairly large provision for doubtful taxes receivable. And again, this ties into the mill properties, basically. The reason for a good chunk of that increase is that there were some properties that the township acquired under the terms of an agreement, which we were basically looking at in terms of the value of the property. And the way that you determine your provision for taxes receivable is you look at the outstanding account balance, and then you try to estimate the underlying value of the property, which is technically what you would take back if you were to register the property and go through the normal process of taking a property for taxes. Because you actually were able to purchase that property for nominal amounts, you did lose the I'll call it the fair value that was attributed to those properties in that taxes receivable balance, which is what caused the taxes receivable to decline. A little bit of complicated accounting, and it sounds kind of negative, but the positive is that the balance of the receivable is still there, and the township, I guess, does have the opportunity to pursue that particular taxpayer. So,
Walter, the taxes receivable, the 570,000, how much of that would be people that are errant in the township versus the old mill property?
That's a really good question. The old mill property, I am going to guess that not quite half of that balance is the old mill property. I don't have that working paper in front of me. I can provide a better answer, perhaps, after, if I have a moment during the in camera to be able to look at it. But there were quite a number of accounts, I would comment, that were in arrears. 1 year, 2 years, some into 3 years that were not mill properties. Mr. Hedrick and I went through the listing on a couple of occasions to kind of identify things. And in actual fact, that formed part of the rationale and the background to a point that we made in our management letter to administration. So,
Thank you.
okay. So at the end of the day, when we look at the bottom line on the statement of financial position, we've got an accumulated surplus of 23,631,000 compared to 13,349,000 dollars. And again, that's because of the investment that's been made in the capital capital assets. So, on that note, what I would do is ask you to move to note number or page number 7, which is the consolidated statement of operations and accumulated surplus. So that particular statement kind of gives you an idea of what the activity for the year was in terms of the revenues generated by the township and the expenses that were incurred by the township during the year. So when we look at the revenue side, you'll see that there's a pretty significant bump in the revenue, which was 14,199,000 compared to 3,204,000, and in actual fact, no surprise, the reason for that increase was the grant money that came in from the federal government and the province relating to the grants for the wastewater treatment plant. So you'll see that that balance was up considerably. I think the Infrastructure Canada balance was about 3.5 million, and the Ministry of Agriculture was about 7.3, 7.4 million. So that accounts for pretty much the increase in the revenues. Under public sector accounting rules, what you're supposed to do is take capital grants, record them as revenue in the year. You increase your surplus, being your investment in capital assets, and then over time, you depreciate that particular asset and claim the expense over that period of time, and reduce the investment in capital assets. When you factor out that 10.9 million, you find that the other streams of revenue, whether it be residential and farm taxation, commercial and industrial taxation, taxation from other governments, water and sewer billings, other fees and charges, permits, licenses, fines, those balances were pretty much comparable to the prior year. I guess investment income was down a bit because the investments were drawn down during the year. But in any case, you wind up having $14.2 million in revenue. On the expense side, basically the expenses amounted to $3,917,000 compared to $3,466,000 in the prior year. You'll see that general government was about $363,000 higher than the prior year. Protection to persons and property was up about $19,000. Transportation services was up about $92,000. Environmental services was only up about $4K, and health services were up a couple of $1,000. Social and family services were pretty flat. Recreation and cultural services were down about $32,000. and planning and development was up about $5,000. If you were to look at note number 8, and I'll get you to flip to that note. It is on page number 20. Down at the bottom of page number 20, that gives you a sort of a different calculation of what those expenses are. We call them expenses by object or by type. So you could see that salaries and wages are by far the largest category. Those were up by about $74,000, I guess. Materials and supplies were about the same amount. Contracted services were up about $114,000. Rents and financial expenses were up about $20,000. There's a provision for doubtful taxes receivable. That's where you see the expense for the year, $620,000 compared to $354,000.
Can I just jump in there and ask why there's such a huge difference 2019 to 2018 on that provision for doubtful taxes? That's quite a jump.
Basically, it had to do, as I mentioned previously, it had to do with the properties that were bought for $1 that came out of the calculation for the recoverable amount of the taxes. That's probably the biggest reason. But as you know, these penalties and interest amounts keep accumulating on that old mill receivable balance, and it basically drives the expense up each year. Now the other portion of the equation that will come into the mix is, subsequent to the year end, I guess MPAC made a determination, and there's a new assessed value for those properties. So next year the numbers are going to look probably a little odd as well as this year, because of the way that the property tax gets calculated.
Thank you.
Then we have donations, and we have contributions that are made to health unit and the DSAB boards. Those are fairly consistent. And then the amortization of $582,000 compared to $603,000. And again, once the water treatment plant is operating, the amortization expense will be increasing by some factor. Another way to look at the expenses is by looking at the segmented information, and that's contained in note number 17, which goes to page 26 and 27. And then what you see there basically is you see all those expenses that I talked about in note number 8, broken down by the different service categories that the township has. So general government protection to persons and property, transportation, environmental, health, social and family, recreation and culture, planning and development. So that gives you an idea of the nature of the expenditures that are going into those different categories. All right, moving back, when we go go back to page number 7, which is the consolidated statement of operations and accumulated surplus, the way that the accounting is done here, because of the capital grant, when you take the revenue and subtract the expenses, there's a surplus in the current year of $10,281,554 compared to a deficit in the prior year of $261,759. So the bad news, I think, if there is bad news, I guess it's the thing to be considered, is that when we look at that $10,281,000 surplus and deduct the grant revenue for the wastewater management plant, which amounted to $10,910,000, which basically had no offsetting significant expenses because they're being capitalized and thrown onto the schedule of tangible capital assets. That means that there's basically a deficit of $629,000 if you're kind of trying to compare apples with apples. So that obviously is something for council and administration to look at and to basically plan around in future budgets. So in any way we take that annual surplus, we add it to the accumulated surplus at the beginning of the year, and that's how we get the $23,631,000 surplus for December 31st, 2019. If you go to note number 7, which is back again on page 20, this time it's at the top of that page, you'll see the breakdown of what that surplus represents. So again, the investment in tangible capital assets at $22,307,000 compared to $11,848,000 is the lion's share of the surplus. The other components of the surplus ties in with current funds to be applied to the operations of local boards. So that $44,631 is actually just the library surplus that they're carrying on their books. Then we have the reserve set aside for specific purpose by council. So we've got the working capital reserve and then the sewer and water reserve. And this is again sort of indicative of the comment that I made about the statement of operations. The working capital balance went down by almost $500,000, and that's where the other deficit that I talked about, the $629,000, has basically been funded. The sewer and water reserve hasn't changed in a number of years, probably about 5 or 6 years. Previously, that had been established to pull in the profit from the sewer and water operation, but there hasn't really been one. So that number hasn't changed. Then the balance of the funds are the reserve funds that have existed. You'll note that some of these reserve funds have actually been increased during the year. So that again is partially where the working capital reserve was adjusted to.
Walter, may I ask you to go back to working capital? What does that refer to? What does that mean?
The working capital reserve, if you're thinking of um, like call it a standard type of business, that's sort of the retained earnings of the company. And those retained earnings are, what allow you to carry the accounts receivable that you're carrying. It basically provides you with short-term financing.
Okay.
In the context here, it's basically it's your cushion.
Okay, I get it. Thank you.
Okay, alrighty. Moving back to page number, I think I'll go to page number 8, which is the consolidated statement of change in net financial assets. I don't propose to go through that particular statement in any kind of detail, except to say that it reconciles your opening and closing net financial asset balances, similar to the cash flow statement on page number 9, which reconciles the opening and closing cash balances. When we move to page number 10, that's the start of the notes to the financial statements. And the notes will outline for you what the main accounting policies are of the township. These really haven't changed from the last couple of years because there haven't been any changes in accounting policies or standards that we've had to worry about adopting. So those I don't think changed at all compared to the last year's statements. Page number 13, you start getting into the detail of some of the balances on the main statement. So there you'll see note number 2 that talks about the cash balances and the lines of credit that the township has, vested sick leave liability in note 3. The deferred revenue is basically the gas tax revenue that hasn't been spent. There are a couple of other little grants that would fall into that category as well. Note number 5 talks about the 2 debentures that are outstanding and gives information about interest rates and principal payment schedules and whatnot to page 15. Page 16, this is where you see the tangible capital assets starting to be reconciled. So we've got land improvements, we've got machinery, equipment, vehicles, bridges and culverts, the road network, the storm network, wastewater. We've got the assets under construction. So effectively, that assets under construction balance tracks the wastewater project. In any case, you'll see that the additions for the year, there were disposals and write-offs, depreciation or amortization, as we call it now. On page number 17, we kind of reconcile the opening and the closing balances there to get to the 22,307,000. Then on pages 18 and 19, we basically show you the same reconciliation for 2018, so you could compare the numbers. Page number 20, we've already kind of covered. Page number 21, you see the what we call government transfers, but you see the details of the federal government and the provincial government grants coming through. Again, those support the numbers that are on the main statement. Page number 22 provides information about the OMERS plan. The township is a participant in OMERS, which is what they call a multi-employer plan. This information basically tells you that the plan, OMERS has a actuarial deficit of 3.4 billion, which effectively municipal organizations in Ontario, are on the hook to fund at some point or another. That's a calculation that's determined by actuaries. You also see what the contributions were by the township for 2019 compared to 2018. Policing, again, that basically is disclosure about the OPP contract and what the expenses were for the year for that. Public sector salary disclosure, there were no salaries in excess of 100,000. Note number 13, contingencies. Normally these are claims, and the accounting for them is to basically record the liability at the time the liability is known, and if there is a settlement. Page number
Can we
23.
just go back for a moment to number 13? Is there an actual amount for that site, for that entry? I don't want any specifics. I just want.
The amount is not determinable, which is what the note basically says. So I guess the answer to the question is no. And if there is a number, if there is a settlement reached, then that number would be recorded in the time that the amount is settled.
Thank you.
Okay. Page number 23, contaminated sites. There was a accounting standard that came out about 3 years ago, requiring all municipal and government entities to evaluate the properties that they have that are not in productive use. There are 5 criteria that need to be applied to require the recording of a liability for a contaminated site. Responsibility for the contamination, acceptance of the liability for contamination, or like a couple of those items. There are no such liabilities that have been accrued in these statements because, as far as we know, those criteria are not met based on the audit that the audit work that we've done. So that's the good news. The bad news is that for your year ending December 31st, 2022, there's a new accounting standard that's coming out that will require you to look at the properties that are in productive use and to establish what they call a ARO, or basically a provision for liabilities for getting properties back to environmentally friendly standards. They call it an asset retirement obligation. So that's something that administration will have to look at and consider over the next couple of years as that standard will come into effect. Incidentally, that standard is going to apply to landfill sites. And as I mentioned before, the township doesn't do that evaluation for the landfill. Again, this is probably going to, this new change coming up is probably going to really require the township and administration to look closely at coming up with some sort of a calculation or or value to record.
Walter, sorry to be constantly asking questions.
No problem.
Number 14, we have a couple of sites where gas stations had operated in the past. And as far as I know, there's still residual tanks. Would that be a liability?
That would be a liability, especially under the new standard coming in. So when you look at the standard, it would say, well, okay, what is the cost of removing those tanks, doing whatever remedial work is done? When is that projected to be required to happen? And then you basically come up with a discounted number, and that number you add to your asset value, and you start depreciating it over time, as well as adding a liability to your balance sheet and depreciating that effectively over time. So what it does is it doesn't really have a balance sheet effect, and it doesn't really have a net income statement effect, generally speaking, because the two offset. But they do want you to recognize that liability.
Thank you.
If I may jump in there, tanks from both those service stations were removed. We had the tanks were removed from both those stations. The only thing we didn't test the soil. So.
Okay. All righty. Note number 15 just reconciles the budget that's approved by council and compares it to the budget that gets reflected in the financial statement. So you're taking it from sort of the financing perspective in terms of the budget and converting it into what we call a PSAD basis of budgeting. And, if you recalled way back when approving a budget surplus for the year of nil and are wondering why the budget surplus on the financial statement is 106,000, that explains why. And then finally, note number 16 on that page, we talk about the impact of COVID-19 in Canada. Obviously, there's been a significant effect. Nobody really knows what the extent of the effect will be. Different municipalities will be affected differently. Hopefully, the township of Red Rock will not be severely impacted. But because of the dynamic nature of the situation, we just basically put that in as a sort of a standard note. Next page, page 24, going on to 25. Again, all the way through to 27, basically talks about the different departments that are reported on the statements. Just more detail for you. And then finally, page 28 gives you additional schedules about the current fund operations, reserves and reserve funds, the water operations, and the sewer operations. So that is the financial statement for the township. I probably went into to more detail than I typically have in these meetings previously, but I mean, I'd be happy to answer any questions that you might have on these.
Any questions for Walter? None?
All righty. Let's take a quick look at the library board financial statements, which I believe were distributed to you as well. The library is actually relatively straightforward. When you flip to page number 2, there's our independent auditors report. And basically, we're providing an unqualified or clean audit opinion that the financial statements for the library board present fairly in all material respects the financial position of the library as at December 31st, as well as its results of operations, changes in net financial assets, and cash flows. Similar to the township statements, we do an audit. I think the materiality level that we used on this audit was about $4,000. So the materiality level is a lot lower because when you look at page number 4 and page number 5, it's because the numbers are a lot lower. So looking at the statement of financial position on page 4, not a lot of movement there. The net financial assets were only about $340 more than 2018. The accumulated surplus was about $600 higher. It was $44,632. When we look at the statement of operations, we see the revenue and the expenses. Revenue was $90,000 compared to the prior year's $91,000 and a budget of $92,000. Expenses were $89,000 compared to a $90,000 level of expense in 2018 and a budget of $99,000. So basically, the library had a surplus of $613. The rest of the statements really just provide additional detail and information supporting those financial statements. Does anyone have any questions on the library board?
Why would that be a separate budget or separate audit?
A separate audit is required under the Libraries Act.
I thought
And
it
Libraries
would
Act.
be consolidated with the township ones.
They are consolidated with the township ones, but the Libraries Act requires each public library board to have an audited financial statement.
Thank you.
Okay.
Other questions for Walter on this nice report?
I do, but I don't think we have enough time.
Well, Albert said he will line something up.
That's right. Thank you.
Okay. Thank you very much for a nice report, Walter.
Well, thank you. My pleasure.
And we will see you next time. Thanks again.
Yes, sir. Thank you.
You can stay on, Walter, if you just want to mute your mic. There you go.
Okay, we'll move on. Everybody's at the minutes of the previous council meeting, have a chance to read them over. Any errors or omissions?
We don't have any, I'm sorry, Worship, we have no minutes.
We have a bylaw to appoint the property standards officer.
Your Worship, can we pass the resolution accepting what was provided by BDO? I believe it'd be resolution number 1.
Oh, I'm sorry, right here.
It's okay.
Need a mover and a seconder to be it resolved that the financial statement for the year ending December the 31st, 2019, prepared by BDO, the Corporation of Township of Red Rock, be read and the Red Rock Public Library Board be accepted. A mover? Keys. And the seconder? Sarah? All in favor? Thank you.
I'm opposing because I do not have a good enough understanding of what the accounting has been. I appreciate Walter's comments, but I need to have more information.
Yep.
Thank you.
Okay. I'll read this bylaw out for property standards officer.
Yes, your worship. I'll just give it one read and then you can go ahead with the resolutions.
Okay, go ahead.
Corporation and Township Red Rock Bylaw 2020-1218 being a bylaw to appoint a property standards officer. Whereas Section 2 of the Building Code Act, or SO 1992, Chapter 23, as amended, provides that council of each municipality shall appoint such inspectors as necessary for the enforcement of this act in the area in which the municipality has jurisdiction. Now, therefore, the council of the Corporation Township of Red Rock enacts as follows: that Samantha Cameron be appointed as a property standards officer. Township of Red Rock bylaw number 2020-1203 is hereby rescinded. Bylaw number 2020-1204 is hereby rescinded. This bylaw shall come into force and take effect on the date of final passing.
Okay, I'm going to need a mover and a seconder. Be it resolved that the bylaw be introduced being a bylaw to appoint the property standards officer in the Township of Red Rock be read a first and second time. I need a mover and a seconder. Okay, Cam. And the seconder. Darkies. All in favor? Thank you. Going to need a mover and a seconder to be it resolved that the bylaw be introduced being a bylaw to appoint a property standards officer in the Township of Red Rock be read a third time, finally passed number 2020-1218 in the sealed municipality place thereon. Do I have a mover? I need a mover. Darkies. And seconded by Sarah. All in favor? Thank you. Okay, we have no correspondence. No reports of municipal officers. No reports of committees. No unfinished business. New business.
Just new business, your worship.
Yep, just new business, I know. CEMC appointment. And I need a mover and a seconder to be it resolved that council appoint Albert Hedrick to the Red Rock Volunteer Fire Department as the Community Emergency Management Coordinator. I'm mover. Sarah. Second by Cam. All in favor? Thank you. Okay, we have I'm going to need a mover and a seconder. The council move in camera to the receive a device that is subject to solicitor client privilege, including communications necessary for that purpose. Do I have somebody to move that? Second by? Somebody gonna second that? Be resolved, council move in camera at 7:56 p.m. in order to address a matter pertaining to the receiving of advice that is subject to solicitor client privilege, including communications necessary for that purpose.
Okay, I'd ask everybody to mute their mics and go and basically.
All in favor on this first?
Sorry.
Thank you. Yeah. We'll have to mute your mics, yeah.
Mike's, and we'll see you at the other side there.
Okay, thank you very much. Just wait till Cam gets his computer back up.
I'm on.
Okay, Cam. Okay, a mover and a seconder. Be it resolved, council move out of camera at 8:35. A mover? Seconder? All in favor? Thank you. Nothing else? Nothing else on the agenda now, so I'll need a mover and a seconder.
I just have to state what you discussed in camera, Your Worship. Just the management letter. Yes.
Yeah, we discussed more of, I guess, management letter of how to run things a little different. Cost wise and whatever. All I can tell you. I need a mover and a second to adjourn this meeting at 8:37. Mover, Cam, Sarah, all in favor? Thank you. And that is it.
Now, this was a special meeting. When is our regular meeting?
It'll be on July the 20th. One meeting per month during the summer.
Have a good night, everyone.
Good
Good
night.
night.
Good night.